I'm very pleased to bring to the stage the NCUA board member, the newest board member, J. McWatters. He was here early this morning. I had a chance to visit with him. He joined the NCUA board last summer. He brings more than 30 years of legal experience and a market-oriented, transparent, and fully accountable regulatory perspective to this board. I think that's true without a doubt. He's already making his mark at the agency, and this is his first time at the GAC. Please welcome Mr. McWatters.
How you doing, sir?
Thanks for being with us.
You're very welcome. Thank you. Good morning, everyone. I am shocked that this many people are here. I figure after last night there might be, 40 or 50 folks here, but I guess I judged this crowd wrong. Thank you, Paul, for the kind introduction, and it's very nice, and most of it was generally true. And thank you, Jim, for inviting me to speak, although I don't see Jim, so maybe he's one of the guys that didn't quite make it in this early in the morning. I will admit that I flew in yesterday from Central Time, which is 1 hour earlier than it is here, after daylight savings time. So to me, my biological clock is set at about 6:40 in the morning. So if I doze off, please bear with me. Please allow me to reintroduce myself to you and discuss how my professional experience affects my regulatory philosophy, as well as my appreciation of and enthusiasm for the mission of the cooperative, not-for-profit credit union community. As Paul noted, by vocation, I'm a lawyer and a CPA, and I practice law at large international law firms for the better part of the past 30 years. During my practice, I've represented many financial institutions, and trust me, I appreciate the challenges you face on a day-to-day basis as you endeavor to execute on your business plans. What you do is neither theoretical nor hypothetical to me, and as such, I will not vote to approve any regulation of the credit union community unless I sincerely believe, based upon my professional experience of representing people like you, that the proposed rule appropriately targets in the least intrusive and most transparent manner the actual risk posed by the credit union community to the taxpayers, to the economy, and to the Share Insurance Fund. In addition to practicing law, I have taught at a law school and a business school, a process that has ratified my faith and confidence in the next generation of young men and women who, with a little work and guidance on your part, will seek to join the credit union community. I encourage you as credit union leaders to incorporate their enthusiasm and entrepreneurial spirit into your strategic plans. The future of the credit union community is surely passing to their stewardship, and I urge you to champion their needs and their preferences for the structure and delivery of financial services. I will undertake to offer a regulatory environment that embraces the next generation by not undermining the sustainability of the cooperative, not-for-profit business organization. Other than practicing law and teaching, I have also had the great honor and privilege of serving my fellow Texans on 2 public sector boards, as well as the U.S. taxpayers on the TARP Congressional Oversight Panel. While I have learned much from these experiences, one lesson from the TARP panel should clearly resonate with you today. That is, no credit union is too big to fail. The credit union community as a whole is not too big to fail. And the credit union community did not cause the recent financial crisis. With that fundamental perspective underlying my regulatory philosophy, it is clear that NCUA should not regulate credit unions as if they are indeed too big to fail, or that they somehow present a systemic risk to the U.S. economy and the taxpayers, similar to that presented by the large money center, too big to fail financial institutions. NCUA should reflect in its rules and regulations an appreciation and transparent acknowledgement that virtually all credit unions are small, locally owned and operated businesses managed pursuant to the time-tested cooperative business model. Anything less offers little in the way of meaningful regulatory relief to a credit union community struggling to cope with today's largely misdirected and resource-taxing regulatory environment. For example, instead of allocating its limited resources and political capital on yet another quixotic search for vendor authority, I encourage NCUA to undertake true regulatory relief, including incorporating supplemental capital into the final risk-based capital rule and modernizing the antiquated member business lending regulations that place unnecessary limits on the ability of credit unions to extend job-creating small business loans to Main Street enterprises. NCUA should thoughtfully investigate the feasibility of exempting from the MBL cap each credit union with, quote, a history of primarily making member business loans to its members, close quotes. It's entirely possible that NCUA has interpreted this key exemption too narrowly. And while we're at it, NCUA should undertake a top-to-bottom review of its field of membership regulations that needlessly restrict the ability of credit unions to serve consumers. I'd like for the NCUA to identify and implement more proactive and positive measures to assist consumers, business persons, and entrepreneurs, and the credit unions that strive to satisfy their financial services needs. Before moving to another matter, please allow me to make two additional observations. First, I have no interest, and NCUA should have no interest in directly or indirectly running your business operations or in influencing the development or execution of your business strategy. You run legal, legitimate businesses, and judging from your success in the marketplace, you do it quite well. NCUA is charged with securing the safety and soundness of the Share Insurance Fund pursuant to the Federal Credit Union Act, NCUA's rules, regulations, and guidance, and other applicable law. I am absolutely committed to that mandate, but you, not me, not NCUA, should develop and execute your business plan for the benefit of your members. Now, I appreciate, again, I practiced law a long time. I appreciate that a fine line often exists between a safety and soundness issue and your ability to operate your financial institution in accordance with your business policy. In my view, NCUA should not cross the line and meddle in the internal affairs of your institution without clearly articulating the demonstrable safety and soundness issue raised by the allegedly offending conduct. Second, today, and rightly so. There is much emphasis on the economic well-being of the middle class, of those who are striving to join the middle class, those who wish to nurture and culture small businesses, and those who are underserved by traditional financial institutions. It is fascinating to me that the credit union community, represented by each of you in this audience, works tirelessly every day to serve these constituencies as your primary business model. You don't focus on multi-billion-dollar cross-border M&A transactions with the occasional wink and a nod to Middle America, but instead you invest the full energy of your institutions in serving Main Street consumers in small businesses day in and day out. So if Middle America needs financial services, and if credit unions are ready, willing, and able to provide those services at an affordable price, then why should regulators inappropriately impede that process? With nearly 100 million account holders, it appears abundantly clear to me that American consumers and small business persons value the services provided by the credit union community. As such, NCUA and other credit union regulators should diligently strive to eliminate all unnecessary regulatory burdens that thwart credit unions from serving the needs of Middle America. True regulatory relief in protecting the safety and soundness of the Share Insurance Fund, in my view, are not mutually exclusive goals. My principal job as an NCUA board member is to exercise autonomous and unencumbered analysis and judgment regarding credit union, regulatory, and public policy matters. I strive for thorough and thoughtful engagement in this process, and it's worth noting that such engagement has led to vigorous and rigorous dissents on my part in several high-profile instances. Regarding the transparency of the NCUA budget, the board's job is not to merely follow the script set by other financial regulators such as the Federal Reserve Board, the FDIC, and the OCC, but instead is to lead and to set the standard of transparency and accountability for all regulators to consider. While at my request, NCUA has recently enhanced the transparency of the budgetary process, much work remains. The board should not forget that NCUA is funded with other people's money, that is the money of your members, and that the operations of the agency should remain absolutely transparent and fully accountable to those members at all times. In addition, and most regrettably, my recommendation for public hearings on the budget, that is, receiving comments in public, on the record, live microphones, television cameras running, from the people who actually write the checks to fund the agency, was rejected. I will continue to advocate for an open budgetary process because more transparency is better than less, more analysis is better than less, and more critical thinking and honest debate is always better than less. With respect to the proper allocation of NCUA's limited resources under the budget, I remain concerned regarding what I considered an upside-down approach by the agency. Given that, according to NCUA statistics, approximately 58% of Share Insurance Fund losses over the past 5 years were attributable to fraud. I question why more energy and supervisory effort are not focused on preventing fraud rather than directed to more and often onerous new rules and regulations for credit unions to follow. NCUA must take a more thoughtful and diligent approach to combating fraud and inadequate internal control systems at credit unions. On the matter of risk-based capital, I cast the sole dissenting vote on the re-proposed rule at the January board meeting. In doing so, I wasn't voting against an effective capital regime, nor is my no vote meant to simply stand apart from this already controversial rulemaking area. Instead, I voted against the proposal because, in my view, based upon my legal experience, working for large law firms, signing legal opinions, working on the legal opinions committees of these law firms, reading statutes, reading regulations, it was my view that a plain English reading of the Federal Credit Union Act prohibits the NCUA board from adopting a two-tier risk-based capital standard. Yet, I appreciate that reasonable minds may differ, and regardless of whether a one-tier or a two-tier rule is ultimately adopted by the board, it is truly ironic and disconcerting that the board would seek to raise risk-based capital requirement for credit unions without also affording the system with a workable means by which to raise supplemental capital for risk-based capital purposes. This endeavor will not require the reinvention of the regulatory wheel, as talented leaders of the credit union community, like those of you in the audience today, have over the years offered viable, market-based approaches to supplemental capital for risk-based capital purposes, and regarding low-income credit unions for leverage ratio purposes. After numerous false starts, it's time. It's time today, not tomorrow, but today, for NCUA to get to work and actually propose a set of rules regarding the implementation of a supplemental capital regime for risk-based capital purposes. I am pleased that the proposed risk-based capital rule no longer confusingly incorporates an interest rate risk component. Similar to my observations about more vigorous and thorough supervision in place of new regulations, it is my sincere hope that the board will choose to address the interest rate risk issue in a targeted manner through the supervisory process and not with a separate one-size-fits-all interest rate risk rule. Let me close with a few additional thoughts. As a safety and soundness regulator, I am very conscious of the need for an objective and forward-looking balance between the free marketplace and protecting the share insurance fund. I am frankly concerned that such a balance is not in place today. I sense a disequilibrium where the degree of regulatory zealotry and overreach is regrettably out of proportion when measured against the actual risk presented by the credit union community to the share insurance fund. NCUA cannot and should not use the chorus of safety and soundness as a catch-all justification for every rule and regulation promulgated by the agency. That's not accurate, and its overuse, like anything, renders it pedestrian and ineffective. Further, NCUA should have the confidence, courage, and conviction to chart a regulatory path for credit unions that is based upon a transparent and fully accountable appreciation of the unique structure and attributes of the cooperative, not-for-profit business model that is not held hostage to a regulatory standard designed for the shareholder-owned, for-profit bank model or the systemically important too big to fail financial institutions model. I hope to play a role in charting that course in working with you, not against you, jointly in the service of the credit union community and the taxpayers. With these thoughts in mind, I asked the NCUA board to establish not less than 3 formal advisory committees with the mandate of advising the board regarding 1, NCUA's budget and the budgetary process. Number 2, NCUA's examinations programs and the appeals process. 3, areas where NCUA may expedite regulatory relief for the credit union community without compromising the safety and soundness of the Share Insurance Fund. Regarding the latter point, and as I have previously noted, these areas of regulatory relief should include, at a minimum, supplemental capital for risk-based capital purposes and a complete rewrite of the member business lending and field of membership regulations. As I have stated many times during my town hall meetings, it is not possible to regulate credit unions without hearing from actual members of the system on a consistent basis in an environment that promotes free and honest exchanges of ideas. To the greatest extent possible, regulation should emanate from a collaborative and collegial process with the goal of building trust and inclusiveness between the regulator and the regulated. I enthusiastically welcome the opportunity to work with the chair and with the vice chair on an ongoing basis and in such a manner. Please understand, however, that I am not a new convert to the mantra of deregulation. I am not a new convert to the transformative power of free market economics. I am not a new convert to the job-creating juggernaut of Main Street small business operations, and I am not a new convert to the financial services needs of the middle class and the underserved. Instead, I explicitly appreciate and have respected and adhered to these economic, social, and political principles and philosophies throughout my professional and academic life. In other words, matters of regulatory relief, the economic power of the marketplace, and support for middle American consumers, small business persons, and the economically disenfranchised have always been embedded as an integral part of my DNA and will continue to serve as the foundation of all actions I take as a member of the NCUA board. In a financial services world dominated by interconnected, systemically important, too big to fail financial institutions, it is truly refreshing and remarkable that the locally owned and managed cooperative, not-for-profit business model exists and thrives today. The continuing success of the credit union system is directly attributable to the tireless, diligent efforts of you and your colleagues. And I pledge that I will endeavor to formulate a regulatory protocol that respects these contributions and accomplishments while maintaining the sustainability and viability of the credit union financial services model and securing the Share Insurance Fund. As I conclude, please allow me to paraphrase our recently departed friend, Mr. Spock. May the credit union community live long and prosper. Thank you.
Wow. And thank you, sir.